Inflation just came in hotter than expected and the stock market printed a brand new all-time high. In the meantime, Bitcoin dropped from $123,000 down to around 116K. We also have an OG Bitcoin whale with over 80,000 Bitcoins transferring his Bitcoin, potentially looking to sell. In today's video, we'll be talking about all of this and how I'm navigating this market in the upcoming days, weeks, and months. If you enjoy the content, make sure to smash that like button and subscribe. Let's jump right into the video. So let's kick us off with Bitcoin. As we can see here, Bitcoin got a pretty significant pump from the 116K area all the way up to around 118.5K. Now this came after a dump yesterday from $123,000 all the way down to this 116K region. So what is next here? Because a lot of people got caught off guard with this dump. Now, let's take a look at the 1 hour chart because you can see that right at the point of control of this range, we got a pretty nice bounce above the level and then we ultimately failed right back down. And why is this? Well, first of all, we did get inflation coming in hotter than expected. The inflation rate year over year came in just now at around 2.7% with the forecast at 2.6%. Remember that the previous was 2.4%. And as this data came out, the stock market just put in a brand new all-time high, S&P 500 at $6,300. However, if I go to the more updated chart here, you can see that we got a rejection as soon as we hit this level, but nonetheless, a new all-time high for the stocks. So what does this mean? With inflation coming in hotter than expected, we need to go back and try to understand what the Fed's mandate is. And that is a dual mandate: maximum employment, low and stable inflation. These are their primary objectives. So with the employment rate still looking relatively strong, we have stock markets near all-time high, Bitcoin near all-time high despite the recent correction, but inflation continuing to trickle on up. That likely means that we will not be getting rate cuts. And we already knew this, we talked about this on the channel at length, but this just further validates this because we can see now that the rate cut odds in July are only around 2.6%. It's highly likely that we stay at the exact same levels. And if we go ahead and click at September now, we can see that the rate cut odds are now almost even. About 1 week ago, we covered this and there was actually a 65% chance that we were going to get rate cuts in September. At least those were the odds. And right now you can see that we are back down to 52.6% with the odds of staying exactly the same, slowly continuing to creep up with these new inflation concerns. And so, Jerome Powell does have a pretty tricky job here because he wants to keep inflation under control and ensure maximum employment. Now, we know Trump and his feelings about this. He keeps on bashing Jerome Powell, saying that he should have cut rates a very long time ago. But with the stock markets at an all-time high, employment looking relatively stable, and inflation remaining sticky, why would he go ahead and cut rates? It's not an easy job. And remember, Fed Chair Jerome Powell's term actually ends next year, and he does not want to be remembered as the guy that let inflation get out of control. And so right now, it's highly likely we won't get rate cuts in July. We already know this, but now September, it's also starting to look more and more likely that we may not get rate cuts. We're still at 50-50, so let's see how this develops. Obviously, no one knows for sure, but if inflation remains sticky, this is likely going to continue to be the case. So let's take a look at the Bitcoin chart here. You can see that after this pump, we're now getting a little bit of a more significant dump on the 1 hour time frame. I don't like looking at the 1 hour time frame because it doesn't really give you that much insight as I upload my video about an hour after I film it. So right here, let's see. What is going to happen to Bitcoin? Because I'm still also tracking this all-important CME gap, which we've been covering on the channel at length. It sits right around 115.5K to around 114.4K. So it wouldn't surprise me if Bitcoin does find its way back in this level as per yesterday's video. However, the question is, will we actually get a significant bounce off of here and then go ahead and pump past $123,000? Or, and this might scar you, are we going to find our way back into the range? I'm laughing because I see all of your comments. Look, the summer chop range guy is here. But ultimately, let me just show you what I'm looking at, because if we take a look at my previous chart here, what we have to consider is that if Bitcoin starts closing back at these levels, all of a sudden we find our way back into the summer range. Every single time I mention this at this point, I'm going to smile because a lot of you have been giving me flack for it, but it's just something you need to consider. Now, as you know, my spot position is in Bitcoin. But as I've always said, if Bitcoin starts dumping now, altcoins will likely bleed worse against Bitcoin, especially if we find our way much, much lower. I am not a perma bear, as I see a lot of your comments. I want Bitcoin to go up. I desperately do, but I am not doing my job if I don't warn you of the potential downside. We do not want to see Bitcoin close back within this range. Now, if we are to see sustained strength for Bitcoin, actually, it would be very, very bullish if we hold this level as support and then spring off of it into the end of the summer. The reason why I was also anticipating a little bit more of a correction here is because if we take a look at the Bitcoin exchange liquidation map, there were way more longs on the market. Way too many aggressive longs, and as you can see, we are starting to wipe all of them out. Now, this is ultimately positive if you are a bull here, because as we start to wipe out more and more longs, maybe this chart can go ahead and get even again. I like to pay attention to this chart because it tells me exactly how the market dynamics are shifting. Now, it doesn't tell you specifically in the short term how you should be trading this market, but it does give you a little bit of perspective. When this side goes way, way up, at that point, you want to be a little bit cautious because it does mean that we will likely come back down and liquidate some of those longs before potential upside once again. And right here, you can see that there are now more shorts piling into the market. We are around 5 billion worth of cumulative short liquidation leverage. And on the left here, we are around 18 billion worth of cumulative long liquidation leverage. So there's still a lot more longs in the market. Pay attention to these levels because this ultimately also coincides with the CME gap. Potentially, we get a bounce from these levels, and that's where I would be looking to enter a long if the market is looking strong. However, I do need to warn you about stocks. If this ends up being a massive red candle and we start bleeding much lower for the stock market, we of course know how this impacts Bitcoin. Look, we know what happens. As soon as the stock market opened, we went ahead and made a pretty significant high right around 6,300. And while we made this high, if we take a look at the Bitcoin chart on the 1 hour time frame, you can see that after coming down to the $116,000 level, we wicked all the way up to around 118.5K, and now we are coming back lower because of course the stock market is tanking from here. So let's see how things develop. Don't be overly aggressive in your trades, whether you're going long or short. I'm just here to show you the data and what I think of this market, and this is exactly why most of my position is in Bitcoin, because if Bitcoin really does go down, I do think that altcoins will likely continue to get wrecked. And speaking of altcoins, I'm sorry to bring this up once again. You know my base case. I think that we will likely go ahead and bleed lower over the next few weeks. But let's see, will we get a pump first? Because if I zoom in here, if you're bullish on altcoins against Bitcoin, and I go on the daily time frame, you can see that we are actually outperforming Bitcoin over the past few days. I will not ignore this. But I still think that there's a chance that we go ahead, maybe even tap into this bull market support band to go and then get rejected to move lower. Now at that point, once we hit near the range lows, that's when I will consider dollar cost averaging into altcoins with my Bitcoin, as I've said many times over the past few weeks and months. So let's take a look at some of the news, because something else that we need to consider is that we have this Bitcoin OG with 80,000 Bitcoins who seems to be selling his Bitcoin. In the past hour, they transferred 9,000 Bitcoins to Galaxy Digital, likely prepared to sell through their services. Will they actually sell? That is yet to be confirmed, but I'm just here to show you the data. And I want to wrap up this quick video giving you a little bit of perspective as to how Michael Saylor thinks, because if we take a look at his tracker, he is still up around 63% all time from all of his Bitcoin purchases. But this is not what matters. I want you to have the long-term mentality with Bitcoin rather than just going in and out of given trades. Now, of course, you can trade the market. I do it all the time, and we make some pretty solid profits in my community, which you have the first link in my description down below if you'd like to join. But what I really want to get at is hear what Foles said, super, super important. Every time Saylor buys Bitcoin, I see two questions get asked constantly on the timeline. What does he know? Why is he top blasting? And for those of you that don't know, top blasting just means buying the top, because it seems like whenever he has a significant Bitcoin buy order, it executes and then Bitcoin goes ahead and dumps afterwards. The only thing he knows is that Bitcoin will be trading higher years from now. This is obviously not actual knowledge, but rather conviction in an idea. And I have that exact same conviction. You have heard me several times on the channel say that I think that Bitcoin will be over $1 million in our lifetime. I really do believe that at my core, which is why any profits that I make trading, whether that's longing or shorting Bitcoin, longing or shorting altcoins, I go ahead and I accumulate some more Bitcoins as I continue to build out my cash position in case of bigger corrections, for example, during the bear markets. My most aggressive buys for Bitcoin have been in the most recent bear market around $16,000 to $20,000. And honestly, as I've said several times, I cannot wait to guide you through that when I go ahead and get very aggressive with my Bitcoin buys. I have not bought any Bitcoin since around the 74K low when we had that max fear in the market, and that's exactly how I operate. Max fear, I buy as much as I possibly can with my cash position. And so if you're trying to build wealth over the long term, try to adopt this mindset. Strategy's Bitcoin purchases are structural and forward-looking, not speculative or reactive. They're not buying because they think Bitcoin is cheap today. They're buying because they think it will be expensive tomorrow. And by expensive tomorrow, this doesn't literally mean tomorrow. It means in many years from now. He is mostly price insensitive. His time horizons are measured in years. He does not care about your hourly resistance levels. And this is funny because, as you know, we trade the markets as well, but ultimately he just keeps on accumulating. He cares about accumulating as much Bitcoin as possible before it hits $1 million. Couldn't agree more with this, so I had to go over the entire thing because this is the same mindset that I have for my long-term investments. I would highly recommend that you split up your portfolio in that way. You have your longer-term investments, for example, Bitcoin, but you also have your trading portfolio, which I use. And in my trading portfolio, I also have two sections, spot and of course, actual trading, day in, day out trading. And so if you can manage to split up your portfolios in this way, it allows you to operate in the market stress-free, especially if you bought a lot of Bitcoin during the dips, which I can understand that maybe some of you didn't, but at least now you know for next time. And that sums up today's video. Inflation came in hotter than expected. The stock market made a brand new all-time high, but then came crashing down, which of course affected Bitcoin. Now this is all on the shorter time frame. So if you're a long-term investor, you're not really fazed by this. However, if you're going in and out of trades, I can completely understand. I still think that Bitcoin is the way to go until we get more favorable monetary policy. And I will keep on beating on that drum. If you're in my Telegram community, you know I talk about this all the time, but just thought I'd repeat myself in case the message wasn't clear. If you enjoyed the content, make sure to smash that like button and subscribe, and I'll see you in tomorrow's video.